Ready? You got me running. Shake it, baby. Raise your hands up. Raise them up.
Hello, everyone, and welcome to the Daily Currency Call presented by Forex Trading Asia. And hello to all the LCMS Trading Club members as well that are joining the live call. And a reminder to anyone watching this on YouTube, if you are really enjoying the content and you want to learn a little bit more about what goes on outside of this currency call, make sure you check out the Jindal Thai website to get subscribed to the LCMS Traders Club. And a quick introduction before we get into this. So we present the Daily Currency Call every Monday to Friday at 11 a.m. GMT +8, and we look at the currencies as follows. We start the week for Monday with the Aussie and Kiwi, Tuesday, the Euro, Wednesday, the Pound, Thursday, Yen and Gold, and then Friday, CAD, oil, and we also look at cryptocurrency too. So for today's currency call, we will obviously be going through a summary, thanks to Kim Hong, of the CPI data that came out from the US last night at 9:30 p.m. GMT +8. We'll be discussing trade ideas as well. I'll be looking at the DXY. There's quite a bit to talk about there and how it moved, and also a little bit into the indices and equities, just to see how things behaved last night in the US session as well. So before we do get into the call, I just want to go through the risk disclaimer as well. We will be discussing trade ideas, and I'll just briefly read this out. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And the trade ideas themselves are shared during the updates within the LCMS Traders Club as well on EchoFin. So that's where you'll get those if you are watching this and you're not a member. So just to get things kicked off, Gim will present the CPI data summary. Thank you very much. Gimmy, over to you.
All right, thank you, Scott. Okay, US CPI data. Not sure how many of you over here actually traded it, but I believe many of the Traders Club members actually traded it, okay, and made some money. So the US CPI data, okay, I would say I was actually hoping that expecting that it actually went higher than, than what was being released, okay? So over here, we can see that the headline inflation, okay, on an annual basis, rose to 7.0%, okay? So it's actually as expected, by the forecasters, analysts, economists, okay? In December, it was reported to be 6.8%, okay? I mean, for the month of November, okay, for the month of November, which was reported in December, it was 6.8%. And then, yesterday for the month of December, it was reported as expected to be 7.0. All right. And then headline inflation was 7.0, and then core inflation, okay, was actually 5.5. Okay, there was actually a half percentage point increase, okay, from the previous release. So right now, okay, at the moment, annual inflation, okay, is actually still close to 40-year high. Okay, you guys may be reading like, inflation has already hit 40-year high and things like that. Okay, but the last time it was actually higher than what was being released right now okay, was back in 1982. I think it was June 1982. Okay, so we are kind of like 5 months away from a solid 40-year high or a decade high. Okay, but still, this is really very high. Okay, and because of this high inflation, okay, the US dollar actually took a hit. All right, because I know there are some members in our club, okay, who are actually trying to figure out the whole economics behind it, okay. It's a little bit, it can get a bit complicated and, mouthful at times, okay. But yeah, like as promised, I will, I'll record a short video, short clip of to explain how, the relationship between the movements of currency and inflation, okay. And I'll probably put it up maybe like this weekend or early next week. All right. So long story short, okay, the rise in US CPI, okay, has actually led to a weakening in the US dollar. So we actually see, well, it's basically across the board, okay, and trade opportunities were being shared just an hour and a half before the release of the data, okay. So this set of data, the main driver, okay, the main driver for this rise in inflation this time round, okay, as you can see, right, what you're looking at right now is the inflation report, all right? For the month of December, okay, December 2021, the main driver is actually used cars and trucks, okay, which contributed to 3.5%, okay, 3.5% on a monthly basis, okay? And if you were to look at the other figures over here, there's, they're probably like ranging around 0 to 1 point something, 2%, okay? So previous months, okay, we see that the used cars and trucks wasn't that crazy, okay? It wasn't that crazy in terms of its contribution to the overall CPI, okay? But this time round, my belief is that because of the whole Omicron issue, okay, which actually sent out some level of fears, okay, across the economy. And of course, with the ongoing supply chain issue, okay, supply constraint going on, specifically the shortage of semiconductors, chips, and things like that, okay, which continue to haunt the, I would say, the production factory, okay, the cars production factories. Hence, there may actually be a strong, the supply of new vehicles being manufactured actually took a hit, all right? Hence, people are still going for second-hand vehicles, okay? Hence the used cars and trucks, inflation actually, it actually contributed to quite a bit of inflation this time around, all right? Then if you guys were to, just glance through the figure, you guys will realize the energy sector, the energy part of this inflation was actually negative. Okay, there was actually a decline in the prices, energy prices. But then, recently I've been saying like oil prices have been rising. Why is that the case that, oil prices in the US have actually been declining for the month of December? Okay, you guys are actually wondering why is that the case? Okay, let me tell you this. It's because of the US SPR. Okay, SPR stands for Strategic Petroleum Reserve. Okay, so because of the ongoing rise in oil prices and the OPEC Plus refusal to hike production, okay, to tone down this ever rising oil prices, the US, together with some other big nations like China, the UK, Japan, okay, and I believe a couple others, okay, they decided to actually tap on their strategic petroleum reserve, okay, which is actually some oil reserve that they actually been accumulating, been holding for I don't know how long, like can be years, can be decades as well, okay. So they decided to tap on it, meaning they will actually draw part of the reserve, okay, and actually sell it into the market, all right. So which is why we are seeing oil prices in the US. Okay, remember this is only in the US, okay, because this is the US CPI data, right? So oil prices in the US actually decline, right? Which is what Biden wants to do. President Biden wants to, tone down oil prices to make it more affordable to, you know, the citizens in the US, okay, the people in the US, right? So which is why we see that, you know, over here, since June, we are seeing like, you know, energy prices has been contributing pretty much, has been pretty much the main contributor to inflation, okay, on a monthly basis. Up until the month of December, whereby we see a negative, okay, a deflation of oil prices, of energy prices, okay? So, yeah, this used cars and trucks is basically the limelight of, you know, this inflation report, okay? So with inflation rising, all right, previous month's data was, let me take a look again. Previous release of the headline inflation was 6.8%, and right now it's 7. The question that people are asking right now is, has inflation begun to stagnate? Okay, that's the thing. Because if it's, I think the Federal Reserve actually forecasted it to run high up until probably early this year, okay, before it start to stagnate and hopefully move lower, okay? So at the moment, you know, the forecast is 7 and the actual release is 7, okay? It may seem like there's a slowdown in the inflation, okay, figure. But what the most important thing right here, right now is, even if inflation were to slow down and perhaps drop a bit lower, okay, starting from next release onwards, all right, it is unlikely that inflation will be returning to the central bank's 2% target anytime, all right? Right now, we are seeing 7. The central bank is targeting at 2. It's 5% away from the central bank's target, all right? And I'm not sure how long this whole US Strategic Petroleum Reserve thing can last, okay? Because right now, the plan is for the reserve to run from mid-December through April, okay? It's just probably going to be like a quarter, you know, supply kind of thing, right? It's just going to last for 1 quarter, okay? Probably like 3 to 4 months kind of thing, okay? And it really depends on how the whole COVID situation turns out, okay? Used cars and trucks. I mean, even if they were to tame energy prices successfully, you know, from this chart over here, you guys can see, you know, there are other contributors to inflation as well, right? I mean, there are food, there are like used cars and trucks, there's like services, medical cares, and things like that. Okay, so all these will play a role. Just taming down energy prices is going to help. Okay, but because, like I said, current inflation level is 5% away from the central bank's target. Okay, so it may peak right now or maybe next few months, okay, in the near future, and may tone down, come back down a bit, but it is unlikely going to go back to the Fed's 2% target, which is why, okay, if inflation were to stay high for a longer period of time, the US Federal Reserve may actually carry out a more aggressive move in terms of monetary policy, okay? And that I will be talking about, you know, I'll be covering more about it when, you know, the next meeting, I think, is on the 20-something, you know, of this month, draws near, okay? So that's for the inflation. Any questions here regarding the US close to 4 decades high inflation? Okay, no questions at the moment. So I will hand it back to Scott for now, okay, for his DXY analysis. Back to you, Scott.
All right, thanks for that, Gimme. And just to get into it, guys, just to start with, the daily chart of the DXY now. So as you can see, significant selling was seen with that release there. We did see it closed briefly under 95 as well. We are currently just above that support level. If I go to the 1 hour time frame, you can see that it really is struggling to hold above there as well. So it is a situation where the Fed need to update the market on the time frame that they're going to act on this as well, because just like Gim said, in regards to the numbers behind the inflation read, well and truly not going to, cool down anytime soon. So it's something to very much keep in the back of your mind as well. There were a lot of trading opportunities last night as well, especially if you did catch the 8 o'clock call. And again, another good reason to jump into the club. But from a perspective now on, what catalysts are important to focus on, I'll just quickly share the news as well, just on what's happening with the economic news for the US dollar. So we've obviously had the inflation data come out. And again, there was, a really strong reaction from the US dollar there. Now we do have a little bit of data coming out just with the PPI, and it will be interesting. Also, really the initial jobless claims, just from an employment standpoint, it would be interesting to see if we can hover around 200K, because that's near historical lows as well with the initial jobless claims that we've been seeing coming out. It is a weekly figure, so don't expect a high price, impact from this. It's just something to refer to, just to keep in the back of your mind that we do see this break below 200. It is suggesting that the job market is very healthy, which we have seen. In fact, there's not enough people to fill the jobs that are required, which is a similar situation in Australia as well. But that'll be the next point of call there. And again, the price action is going to be something worth paying attention to, as well, as we do see it's 9:30 tonight is when we do have the PPI data coming out as well. And it's always an interesting point to refer to, just from a standpoint of what it's costing to actually produce things as well. And it just probably will reinforce the inflation situation as well. Gold's been getting a move higher as well. I want to quickly go back to the charts and just see, the equity market was, well, it was pretty uneventful, in fact. So if we go now and just bring up the NASDAQ, which is a nice barometer for risk sensitivity as well. And we did see that. Let's just bring it up here. So we have seen it move a little bit higher. If we just go to the daily time frame now, we can get an idea on, we have seen the bounce. So there was some, significant concerns. Last week, we did see it push lower, and it did break some support at, below 1552, or even a little bit lower than that. And we did see it wick down. We have seen the bounce. And there is some buying still taking place here, but really with the situation with the out of control inflation, and that what's really driving things is not going to be, as the Fed have mentioned earlier last year with transfer, they've changed that language. It's something to really focus on, that the risk sensitive currencies are a little vulnerable still. There is a rally going on right now, but it's definitely something to pay attention to with the updates we share about what they will be doing, especially with the tapering. And then obviously when that first interest rate is going to be, the interest rate rise is going to happen, and it might be more than 3. We've seen a few speculations that it will be more than 3. BlackRock came out, Goldman Sachs as well. So let's just see what happens. Short-term opportunities are definitely present, but the longer term, it's just got to be a sit and wait, because you can really obviously get whipsawed with further movements that are occurring. So I would say that's how it's probably best to approach things until we get a little bit more clarity from the Federal Reserve as well. But those are my thoughts there on the US dollar, with potentially some more downside just with the price action that we've been seeing. But more updates will be coming later today, just for the LCMS Trading Club members, on next levels to pay attention to, and what trade ideas are looking more likely later in the day as well. But those are my thoughts there, guys. So it is Thursday, so we've got the yen, a few pairs to go through, and also gold for any trading opportunities. So back to you now, Gimme.
All right, let's look at some charts. Dollar yen. Okay, so I was sharing with the club members yesterday. It's probably the best pair to not trade during the US CPI data release. Okay, why is that the case? Because yesterday it was actually moving towards my support of 115. All right, so I was saying that the potential profit, okay, to be gained from dollar yen is, is pretty low as compared to the other pairs that I've shared. Okay, so at that time I was actually waiting for this support zone to be broken before looking for any selling opportunities. Look, after the US CPI, the dollar yen has already broken its support. Okay, it is now trading at 114.54. All right, hence we can already start looking for selling opportunities. Okay, so my level, entry level in this case would be 114.3. Okay, it's getting closer and closer. Okay, personally, okay, I'm actually expecting the US dollar to weaken further, all right, because of the CPI data release. Okay, the impact of the weakening of the US dollar may actually flow into the European markets open at 1600 GMT plus 8 later on. Okay, which is why I'm still looking for selling opportunities of dollar yen. Then my stop loss would be at 115.3, which is around here. Okay, it's above my resistance of 115, and my take profit level would be at 113.3, which is around here. Okay, it's just a bit above my 113 support. Okay, so with that, okay, this is actually a 100 pip stop loss, 100 pip take profit. Okay, 1:1 risk reward trade idea. All right. Okay, there's one thing to take note. All right, if we were to look at the trend of this pair at the moment, it's actually an uptrend. Okay, so this trade technically is a counter trend trade. Okay, so you guys may want to, okay, if you guys were to take up this trade idea, may want to come back to this chart probably on an hourly basis, once an hour or once every 2 hours, okay, to make sure that it's still moving in the downwards direction. Okay, because counter trend trades, we are not sure how long that whole CPI impact can actually last. Okay, and because the US FOMC has been pretty hawkish, okay, recently during the last 2 meetings, okay, it may actually, the US dollar may actually make a comeback, okay, hence the CPI impact may actually be short-lived, okay. So because technically speaking, this is a counter trend trade, you guys may want to keep this trade short term. So keep in mind that the take profit level of 113.3 is actually a potential take profit level. Okay, not saying that if you were to enter at 114.3, hold your trade all the way to 113.3. Okay, that may not be a good thing to do if it starts to rebound. All right, so that's for dollar yen. Now moving on to the next yen pair is the euro yen. For euro yen, okay, it has already broken my resistance of 130.6. Okay, so right now it's sitting above this support zone. Okay, and guess what? There's this 131 key level over here, and I would say at the moment euro yen has already broken above this key level. Okay, let me just change this color so it's not confusing. Let's just put it as this color. All right. So I'm actually looking at buying opportunities of euro yen. Okay, at the moment it's actually, I would say, testing to break below 131 level in a scenario whereby it actually bounced upwards. Okay, let me just put some short lines to illustrate what I mean by bounced upwards. Now, if euro yen were to move like this, okay, meaning bounce back upwards, okay, I'll be looking for buying opportunities. Okay, and my buying level, okay, unfortunately, okay, it's going to be quite high. All right, it's going to be quite high at the 131.7, which is around here. Okay, so it has to clear the recent high, which is over here, okay, and over here, right? Before I'll be looking for buying opportunities. So 131.7 with a stop loss at 130.3, which is below my support at here, 130.3. Okay, that is a 140 pips stop loss. Okay, and then my take profit would be at my potential take profit. Okay, once again, my potential take profit would be at 133.5. Okay, which is a 180 pips take profit level. So this is slightly more than a 1:1 risk reward ratio. Okay, so personally, I feel like, if you guys were to take up this trade idea at a shorter time frame, okay, maybe like going down to H1, like I've covered yesterday, or even on Monday, okay, Monday evening, you guys don't have to, set your stop loss at such a wide level, all right? Because like I've said, if it actually bounced off 131, okay, 131 can actually be your potential stop loss level, okay? So somewhere around 130.8, okay, for short-term traders, okay, for shorter term trades, all right, 130.8 can be your stop loss. And then, your take profit level, you can continue to keep it at 133.5, okay? But of course, if you guys are trading this short term, I don't expect you guys to hold your trade all the way to 133.5 because it may take a week or two, maybe a few days or maybe a week or two to actually hit that level. Okay, so yeah, it depends on how you guys want to take up this trade idea. Okay, short term or medium term or even a longer term kind of trade idea. Okay, so that is for Euro Yen, a buy at 131.7. Okay, moving on to something more fast-paced, action-packed, Pound Yen. Okay. Unfortunately, for Pound Yen, okay, yes, I'll be looking for buying opportunities. All right. Right now, again, you see a key level at 157. Okay, and it has already broken up above. Okay, over here, it has already broken up above the 157. But at the moment, it has come back down to test this level. Okay, really break below this level. Not at the moment, okay? Like I've been mentioning recently, pound has been pretty bullish, okay? Especially against the yen, all right? So in a scenario whereby it breaks below, then, I won't be looking for selling opportunities because this is too strong of an uptrend to actually go against at the moment, all right? But if pound yen, okay, were to do something similar like what Euro Yen, like what I hope Euro Yen would do, okay, which is a bounced up from the 157 level, I will be looking for buying opportunities. Very, very short-term buy, okay, at 157.4, okay, 157.4 will be my entry price for my buy trade idea, okay? And the stop loss level, I can only afford to put it at 156.9, okay? 156.9, which is around here, okay? Because, all right, like I said, this has to be a short-term trade because look, where is it heading towards? It's actually heading towards my resistance zone of 158, okay? Hence, my take profit level, the most I can squeeze out of this trade is a 40 pips, okay? It's at 157.8. So my potential profit target would be 50 pips and my 40 pips, okay? But my stop loss, okay, would be 50 pips. This is definitely a bad risk to reward ratio, okay? But if you guys joined the call yesterday, okay, like I mentioned, pound yen moves, like a dragon, that's why it's codenamed dragon, right? So later on during the European market open at 1600 GMT plus 8, if we were to see pound yen, okay, reacting bullishly to the opening of the markets, okay, there may be good short-term trade opportunities like this, like in this case, okay. Hence, I would say, take up the trade, close it when you have the profits. Okay, do not wait for a retracement, because that retracement may actually come back to test the 157 level. Okay, at the moment, just like what it did yesterday over here. You see, look at this long red bearish candle over here. Okay, at 2200 GMT plus 8, right, on the 12th of Jan. The last thing you want is, a bullish move upwards, followed by a stronger bearish move downwards, okay, coming back to test the 157 level, or maybe even breaching below this level, okay, hence hitting your stop loss, okay. So yeah, if you guys want to take up this pound yen trade, it's going to be, I would say, a pretty risky trade to take. Keep it short term. All right, so that's for the yen pairs. Okay, lastly, we have the gold against the US dollar. Okay, XAU USD. So with regards to the US CPI inflation data released yesterday, we did see a strong weakening in the US dollar. Okay, and some of you may already know there is actually a negative correlation between gold and the US dollar. What I mean is, when US dollar, okay, were to move upwards, okay, there is a tendency that gold prices will move downwards, okay, vice versa. Okay, one move up, the other tends to move down, the other move down, one tends to move up. Okay, so with the whole weakening of US dollar, as a result of the CPI report, okay, we did see a little bit of the strengthening of the gold. Okay, we did see a little bit, but not that much. Okay, my take is this: there is a 1,830 dollars per ounce of gold price level over here that we need to pay attention to. If I were to zoom the chart out further, okay, then we will see that it has been tested several times, like 3 times, and at the moment, okay, it's actually testing the 4th time. All right, so this level may actually be the reason why gold traders or gold investors refuses to push price above 180 or 1830. Okay, so if you guys want to look for trading opportunities in gold, I would actually wait for 1830 level to be broken above. Okay, price to break above 1830 before you guys look for buying opportunities. Now keep in mind that gold moves a lot as well. Okay, I mean, if you were to look at the recent okay, by the way, this is on H4. Let's just go over to daily. Okay, so we can see then you can see like gold price can actually move from 1844 to 1804, like a $44 per ounce kind of a drop in one day, or even some $30 over $20 per ounce increase in one day. Okay, so yesterday's move was pretty trivial, I would say, despite this whole inflation data, which is why I felt that the 1830 level is something that we have to pay attention to. Okay, now if it actually breaks above 1830, okay, then we'll be looking for buying opportunities. Okay, which level will we be looking at? My preference is 1840 because it's actually $10 above the resistance level. But I would really want to be very, very safe on gold, okay, because gold moves a lot, and it's better to actually keep some space, okay, from my resistance level before looking for buying opportunities. Okay, so gold, yes, look for buying. I wouldn't dare to look for sell at the moment because US dollar is weak at the moment. Not sure how long it's going to last. Okay, but as of this currency call, it's definitely going to be weak. So I wouldn't dare to sell gold at the moment. Buying opportunities is the only way for me right now. All right, and it has to go 180. What's wrong with me today? 1840. Okay, before I will look for buying entries. All right. So any questions on the yen trade ideas? Okay, there's one question. Great. It's on CPI. What can counter the CPI effect? What can counter the CPI effect? Okay. A more hawkish Fed will counter the CPI effect. Okay. So right now in the markets, okay, everyone is actually worried that the US Federal Reserve may actually withdraw the support, i.e., the bonds from the market faster than expected. Okay. So back in the minutes, okay, the most recent released minutes, they actually mentioned that a discussion on selling back the bonds that they are currently holding onto, okay, a discussion on that has actually taken place during the December's meeting. Okay, now everyone is just worried. If the pace of releasing the bonds back into the market is faster than anticipated, all right, that means the Fed is as good as releasing all kinds of support that it is providing the market with at the moment. Okay, and that can actually have a knee-jerk reaction on the equities market. Okay, and there is actually a correlation. Okay, an inverse correlation between equities market and currencies. Okay, i.e., when we see prices when we see equities market rally, okay, there tends to be a decline in the US dollar. Okay, and if we were to see US dollar were to increase, okay, were to strengthen, then there's a tendency that the equities market, the US equities market, I have to put it clearly, okay, US equities market may decline. Okay, so right now we are looking at a US dollar weakening. Okay, and to counter the CPI effect, if the Fed would be more bullish, would be more hawkish, okay, that we will have to wait till the FOMC meeting this month on around, I think, 20 something of this month. Okay, I will inform you guys again as the meeting draws near. Okay, if they were to, for some reason, okay, for whatever reason, double up the pace again of QE tapering, or or highlight or give a hint that QE tapering may actually end next month, okay, in February instead of in March, okay, that is definitely a more hawkish move. Okay, then we may be seeing the return of the US dollar, okay, the return of the strengthening of the US dollar. That will counter the CPI effect. Okay, that inflation data was perfect for the Aussie dollar and pound dollar trades posted earlier in the week. Both hit TPs. Good for you. Okay, like I've said, you guys really have to join the Monday, Wednesday calls, especially when there's like major news coming up just shortly after the calls. Like on Wednesdays, usually there's the US CPI or the Bank of Canada. I don't know, for some reason, Bank of Canada meetings tend to be on Wednesday at like 10 or 11, that kind of thing, right? So since our call is at 8 GMT plus 8, we will always have the luxury to give you guys a prep on potential trade ideas to trade, be it scalp or short term, in response to the whatever major upcoming news that's going to take place in a couple of hours time. Okay, so if there's no questions, well, if there's any questions, okay, just feel free to put it in the Ecofin chat platform, and we'll get back to you shortly. All right, so with that, I will hand it back to Scotty.
All right, thanks for that, Gimme. And I have shared the trade ideas as well. Make sure that you do stay in the Ecofin chat as well, just to get some more updates depending on how the markets behave. And thanks again for joining us. We've got CAD, oil, and also cryptocurrency tomorrow. So hope to see everyone in the call. And thanks very much for joining us, and have a great rest of your day, everyone. Bye for now.